Nitesh, thanks very much for that perspective. We'll just come back to you for a few more questions in just a moment. I just need to wrap up the markets. The gong goes. We've closed higher, about 0.5% for the Nifty. For the mid-cap and the small-cap indices, also fairly impressive close. That's reflected in the market breadth, which has been healthy in the favor of advances. So, all in all, given the global backdrop, our markets have performed in tandem. Yeah, barring a few knee-jerk reactions coming in on Idea as well as Bharti, and Aisha just alluded to the reasons damping sentiment there. That will, of course, work well for LGU, one would imagine. Other than that, you're looking at a fairly green screen, this afternoon. You're looking at a green screen across the board, even for pharma and IT. IT, of course, ahead of increased earnings later this week. I think the market is just preparing for those numbers and what the management have to say about the environment in the US that would or would not, be conducive for business there. And then in case of pharma, it's going to be very, very company specific. Lupin, Sun Pharma, ahead of the Halol plant inspection, and then even for that matter, Aurobindo, and from the broader markets, Wockhardt, a whole host of these names. Pharma as a pocket has seen a fair amount of interest in the session today, and the headline says it. It's really been some bout of sector rotation that has helped the markets close at fresh record highs, and that's the key headline coming in from the markets desk today. So barring telecom, which hasn't participated in this move, including the laggards, this has been a good close for the market session.
Oh yeah, it has been, and that's the headline which you could feel good about, that it's a record close for our markets, the fact that we opened at record highs and we've managed to sustain those levels. And I think that's critical because in the past, time and again, we have seen the markets clock in fresh highs, but that's added as a slippery wicket. We've all seen as to how big a resistance level 10,500 turned out to be, managed to break past that, and now aided by global support, you are seeing markets really break through that ceiling. So well past 10,550, we've now managed to close at that 10,600 mark, and good breadth as well to close the day with names like IDFC Bank perking up 8.5%, Shrey Infrastructure, which was a call from Manas as well, a 7% uptick coming in there. Capital First, this has been really moving up steadily, 6.25% higher. Wockhardt, which has got to be the strongest amongst the pharma names today, along with, of course, Sun Pharma. This also goes home with a 5.5% gain, and Jindal Steel on that fundraising plan, a QIP. This has also been a really strong one, has held out very smartly. Before I get back to Mahantesh, just a quick word from our chartist as well. CK, impressive close. The fact that we've managed to hold on to those opening highs. What's next in store for us?
Well, impressive indeed, the fact that the market could open much better and hang on to that better open almost all through the day, building as it were through various sets of stocks. I think what is most impressive today is the wide breadth and the fact that substantial number of side stocks, not just the prominent ones or the trader patronized ones, but if you take a look at stocks like ICICI Pru Life or Capital First or Mindtree or stuff like that, which is not really the Work Pharmas or ICICIs of the world, which is traditionally the traders' playground. I think it clearly shows that much more money is flowing into the market, and if this were to continue, we should see the uptrend sustain. We had a strong breakout at the end of last week, and we are carrying through on that breakout into the start of this week, and therefore based upon whatever signals are there on the chart as of now, we should remain bullishly biased. At the same time, levels are indeed high, so it would be prudent to say that adventure should be curbed a little right now. So my suggestion would be that if you are holding some stocks, exit something before you get into something else. Don't have too many balls to juggle in the air. When the market suddenly takes a reversal, then you might find yourself in a lot of trouble if you have too many balls up in the air. So my suggestion is out of trouble if you have too many balls up in the air. So my suggestion is continue to participate on the long side. There is no signal to the contrary, but then reduce adventure a bit, keep a little bit of control on your quantity, because as success ratio increases, people generally tend to throw caution to the winds, and greed generally takes over. I think that is what one needs to guard against at this juncture.